It's a delight to have with us our guest to talk more about the oil prices and the metal prices, Mr. Vijay Valecha, CIO at Century Financial. Welcome with us, Vijay. First, let's talk about the movement of the oil prices, which is ticking down once again. In your opinion, to what extent this is just due to having less geopolitical risk premium and thus having less impact on the oil prices, or perhaps the big concerns that are related to the weakness of the demand still hegemonizing and affecting the movement of the prices?
Well, three main factors that are affecting oil prices to come down. It is definitely less geopolitical risk now as compared to what we just saw yesterday. And we actually are seeing demand reduce and stockpiles increase around the world. As stockpiles keep increasing, we understand that this demand is not really increasing at the rate that we expected it to. At the same time, we also see one major factor, that is China is growing, but China is not growing on the industrial side. More of the growth is coming in from China right now is because of the reforms from the government. For that to trickle down into the industrial end will take at least 1.5 to 2 years. So although the Chinese economy and the stock market might start moving on these market measures, but it won't definitely affect crude prices for now.
Vijay, since all the focus now is on what's happening in the metal markets and the big leap that we had in gold, in copper, and silver, to what extent do you believe that the fundamentals are playing a role in these increases, and to what extent today also the speculation and the arbitrage is contributing in these historical increases?
Well, in copper, definitely we see a lot of arbitrage play, and that is definitely moving the prices. I don't think the copper prices, the new highs that we have seen, are sustainable for a very long time. The story, however, is very different when it comes to gold and silver. They look like fundamental inflation upward moves that have not come for the last 10 years. And that looks very, very sustainable. A lot of governments, just like the People's Bank of China and many other governments, are actually buying and keeping more and more reserves of gold, given the actual geopolitical risk that is there around the world. So, even though interest rates are high, gold is actually sustaining these levels. I think the prices are much more sustainable because end of the year we definitely will see a few rate cuts, and those rate cuts will definitely push the price even more higher. So gold and silver does look sustainable and actually does have the legs to even go further. I will not be surprised to see 3,000 on gold and even 41 or $42 on silver this year.
Vijay, not only the gold and the silver had a big increase lately, also the copper had a high increase, and today the fears are from the shortage and supply of copper playing a big role, and also the increasing demand on copper. In your opinion, to what extent also we will still have higher levels for the copper in the coming period and having more demand on copper?
The demand in copper has increased, but not so significantly as the prices have. So, although I do feel the bull run is justified on copper, but the extreme size and the speed of the bull run is not. So, I do feel that we'll see a small correction in the near term. In the long term, yes, copper does be bullish, but in the near term, we will see at least a 20% correction from these prices.
Correction by 20%. You are saying for the copper. Some are still betting that we will have a new record prices for the copper because the demand on the copper will continue and the shortage of supply will continue. The stockpiling will still be weak. So what are the factors in your opinion that will lead to this type of correction?
Well, the major correction will come because right now there's actually supply shortage, which doesn't mean that actually there is shortage of copper in the real source. It is just the means of travel that has been a problem. Such arbitrages usually are captured within 2 or 3 months. So once we see the LME copper subsiding, we see the China copper subsiding, and that's how the impact will also come on the CME. So it is just different exchanges having different roles right now, and that kind of an arbitrage usually does last for 2 or 3 months, but then does come back. We did see a very big spike come in last week, and then it came back down as well. That just pretty much shows that once the supply chain issue gets resolved, which is not very difficult to do given the size of the metal. Had this been a much smaller metal like rhodium or something, it would have been a different story. But when it comes to copper, such kind of supply chain issues can be easily resolved.
Vijay Valecha, CIO at Century Financial, thank you so much for being with us. It was a pleasure having you with us.
Thank you so much.